Well, joining us to wrap the week in the market is Martin Smith from Anchor Capital. Thank you so much for your time, Martin. It's been quite an interesting week and quite an interesting one because of what we are expecting next week. So next week is a very, very big week for, a lot of economic data and some central bank decisions. How are markets feeling ahead of that week? Because I feel like trading has been rather choppy.
Yeah, absolutely. And I think if you just look at September from a kind of seasonality perspective, it is traditionally a very, very volatile kind of month, and it's proving that so far for us, which is the most fun thing in the world to do, to kind of look at as a portfolio manager. But for now it's a bit choppy, it's a bit volatile, but you've seen a little bit of positivity creep back in the market. I think maybe post that CPI number, and markets are looking to kind of that 25 basis points cut from the Fed. But for now, positivity. But as you know, in this market, and specifically September, let's see how we go.
Well, actually, another thing that's been interesting is the rally that we've seen in the resources, particularly on the JSE, with PGMs and gold leading that rally. Is there anything specific, or is it just maybe markets kind of pricing in optimism in terms of what we could hear from the Fed next week?
I think it's a couple of things, right? I think, like you said, you've had the PGMs. You've got palladium kind of above $1,000, which is obviously quite positive from that perspective. You maybe had a little bit of short covering, I think, out of the Sibanye share after they announced that there wouldn't be a kind of a rights issue. So that was positive. Gold all-time highs obviously also leads into some of the stocks. And from a base metal perspective, you've also seen a little bit of stabilization in prices from that side. So I think it's just a couple of factors all moving at once, as opposed to something fundamental at play, if that makes sense.
All right. Well, sticking to resources, because we did have Anglo American kind of beginning its process of unbundling Anglo American Platinum. There was an accelerated book build there that they embarked on, where they put, I think, 5.3% of Amplatz's shares in the hands of other shareholders. What do you make of this? Because we also did see the markets not really reacting positively to Amplatz, although we did see a bounce back the next day after that.
Yeah, I mean, it's part of their kind of new portfolio and the new restructuring, right? Which I think they're aiming to do by the end of next year. That's the kind of mark where De Beers, Amplatz, and the kind of met coal side of the business all kind of unbundled, and it's just kind of going to their plans. So they've obviously got rid of 5% now, still about 73% holding in Amplatz at these levels. So again, I think positive for Anglo American, their kind of longer term restructuring, where it's going to mainly be focused on iron ore and on copper. So again, I think just doing what they said they would do a few months ago, and I think let's see how it pans out. But that's it, I think.
And it's quite interesting because, I mean, a lot of analysts have been talking about this overhang then that Amplatz is going to be left with, and really that also coming to fruition as we are seeing so much volatility in that stock. Martin, let's go into banking. I think you've chosen this as one of your stock picks before FirstRand. It came out with its numbers yesterday. They were talking about a year with a tale of two halves there, but still posting positive growth, where we did see the increase in their dividend being higher than their normalized earnings, which is really a good thing. But seeing the stock didn't really react to those numbers, and even today it's down slightly, almost 1.5%. What did you take out of those numbers?
So I thought it was a very good set of numbers insofar as kind of historical data is concerned. But I think if you look kind of forward, and also what the share has done in the last kind of few months, I mean, this was a 60 Rand share 2-3 months ago. It's had a monumental rise, and I think it's also re-rated quite nicely as well. So you've had a very big rise. I think the result was good, but I think their forward-looking guidance may be a little bit behind what the market was expecting. they're talking to kind of GDP growth plus 0 to 3%. That's kind of the range they're putting it into. So I think maybe the market was looking at that and saying maybe he wants a little bit more. Again, the share price is re-rated a little bit. And I think that's why you've seen maybe the share kind of do what it's done. But I think still our favorite play in the SA kind of bank sector from a long-term perspective. And I think the more foreigners that also come into this market, I think you'll also see some flows really get redirected into what is essentially a very good proxy for SA Inc.
All right. Martin, let us get to your stock pick for today. What are you choosing?
So we've been buying some Murray & Roberts. We've actually been buying it for the last few months. Obviously, had also a massive rise in the share price, but we had results earlier this week. And I think if you look forward, the business is in a very good kind of position, a very strong fundamental position going forward, and also looking still very, very cheap from a multiple perspective. So yeah, Murray & Roberts for something that's a little bit in the kind of small to mid cap space.
All right. Well, thank you so much for your time and for your insights today, Martin. Much appreciated. That was Martin Smith from Anchor Capital.